You're listening to Breaking New Ground. In this podcast, we provide thought-provoking conversations for those looking to begin or advance their entrepreneurial real estate goals.
Together, we'll venture into the world of commercial real estate with entrepreneurs who challenge the status quo, building innovative paths with bold approaches.
We're your hosts. I'm John Pugh, a real estate developer and investor.
And I'm Rachel Walters, a real estate marketing expert. Throughout our episodes, we'll bring in real estate trailblazers, creating a space for inspiring conversations surrounding commercial real estate.
Pugh Management is proud to sponsor the podcast Breaking New Ground. Pugh Management is a premier developer for mixed-use, multifamily, and industrial properties. We love to develop places to live, work, and play. Pugh Management partners with family offices and institutional investors on projects in New England and Central Florida. Check us out online at pughmgmt.com.
Hi there. Today we're joined by a guest who's mastered the art of building, investing, and taking risks, both in business and on the water. Nick Jones is the founder and CEO of Alakai Capital, a diversified commercial real estate firm here in Florida, specializing in development, investment, management, and brokerage. Nick spearheads the company's growing acquisition and development pipeline, overseeing a 750,000 square foot portfolio, while also leading its management and brokerage services. But his expertise doesn't stop in real estate. As the founder of Alakai Ventures, Nick is also a private investor in early stage tech and hospitality companies, helping to fuel the next wave of disruptive businesses. Before launching his own firm, Nick built a strong foundation in real estate brokerage with Colliers, and believe it or not, spent over 9 years as a professional wakeboarder, bringing the same fearless mindset to both business and competition. Today, we're diving into Nick's journey from pro athlete to real estate leader, learn a little bit more about market trends shaping commercial real estate, and also how he's navigating the intersection of real estate, technology, and venture investing. Thanks, Nick, for being here. We're excited to have you.
Thanks, Nick.
Thank you for having me. Very excited to be here, guys.
Awesome. Thank you. This is so one of the things that I, personally, this is, my personal thing, and I think other people can definitely relate to this as well, is this concept of being an athlete and kind of going from athletics and competition into business and real estate. There's a lot of parallels and overlaps. Maybe you can just speak a little bit to your career as a professional wakeboarder, and I don't know, what were some of the pieces that kind of connect you with business and that you found particularly valuable from that experience?
Yeah, absolutely. And I think I see this with athletes all across different sports, whether it be team or personal, but you really see that to get somewhere in professional athletes, you have to have a certain amount of drive and a certain amount of continuous commitment when you're not seeing results.
Yeah,
and
for sure.
So it takes a lot of time, but when you get to a certain level in sports, you kind of get that taste of what success feels like. And not many people outside of sports can tend to get that, and it creates that drive. It's almost like you're intoxicated wanting more of what that success feels like.
Yeah.
So for me in wakeboarding, I grew up in Seattle, Washington, which was a challenging place to ride. So in general, from the very beginning, I had to battle with cold water, challenging climate before I moved down to Florida. And then, the league kind of completely changed. You're the top in the world is who's competing with us down there, and just hard work every single day. Finally, when you get to the point where you're out of, the junior men's, but you're in the pro leagues, and then you start to see yourself build up to where you hit, podium and do some finals, you get this taste, as I mentioned, that is just makes, all the hard work worthwhile. And it takes years and years and years in any sport. Luckily, when you're young, sports are generally more fun than work. So you learn that,
right.
You learn that motivation, you learn that consistency at a young age, younger than, most. So then when you transition that into the work environment, especially for me, I had to start at ground zero. And so it was really challenging those first few years to have the consistent motivation where I wasn't seeing much, movement in my craft, my knowledge grow. But from, the sport, I was able to continue to push. And, it probably took me about 10 years once I transitioned to real estate to start to actually feel like I was close to the area I wanted to be. And, it's really just a drive from sports. And I've talked to a bunch of other athletes in different industries. Yeah. A lot tend to love real estate because, there's so much other human interaction involved in real estate, and people in athletics generally excel at, community and teamwork.
Yeah.
And, a lot of them have that same experience where it's just, it allows that continuous push for the extra hour each day that it may take for success.
Interesting. Yeah. I mean, I can definitely relate to that. I think one of the things, it's funny, just from a basic standpoint, right, in terms of athletics, I remember a friend of mine who wasn't really an athlete, and he was talking about going to the gym and lifting weights, and he's like, I'm going to start this new workout regimen. And conversation was, day one, he showed up at the gym and lifted some weights, and then day two, and then by day three, he was kind of like, I'm not seeing the results. I don't get it, And I just remember thinking like, well, you'll probably be at least a couple weeks, with not, if not a month, before you see results. But it didn't even, like, as you were kind of saying, you learn to just show up, right? Just keep showing up, keep learning, keep finding ways to looking for progress. I feel like people expect progress immediately, but if you keep showing up, you keep kind of that focus, you can allow for yourself to create value in the space that gets you excited, right? So I think, but I think your point about community and working with other people is like in relationships is such an important one, and I think I really credit my time in athletics with a lot of that too, and I think it really does explain a lot. But your longer term, kind of what you're describing, longer term in terms of getting to a podium, getting to a championship, and those pieces, that to me is it's like the next level, right? First you learn how to just show up, and then there's kind of how do you just take things to the next level, and that to me is exciting that you've had that experience, and clearly it's translated into business. And I'd love to hear more about Alakai Capital and kind of where did you start, and kind of how did it come about, and where did you start, and what were some of the things that you had to overcome to kind of get to where you are today?
Yeah. So Alakai Capital is a name that we actually just rebranded into this year. And when you look at the growth of my professional career, it really lines up well with the brand, and it's been an exciting part of that growth. When I retired from wakeboarding, like I said, I started as a broker, and when I was wakeboarding professionally, my whole career I was going to University of Central Florida, and so my thought was, okay, at some point this may end, even though at times I thought I'd do it forever. And so if it does, I should probably have some experience. I had a professor at the school who was a really strong mentor for me. His son was a pro surfer, this gentleman, Randy Anderson, and he was just a super sharp real estate entrepreneur. And he made the idea of investing just seem fun and easy. And so I really latched onto him, and it really made me, I wanted to sit in the front row of the class and focus, got me interested. So when I retired, he pointed me in the direction of a local broker at Colliers, Susan Morris, who we jumped in and did land brokerage. And this was back in about 2012 when land was more expensive than the buildings right next door to it. So I almost felt like a timeshare salesman. I'd be calling developers, asking them if they wanted to, if they were interested in this land to build a hotel, multifamily, whatever it may be. And they were constantly just laughing at me or not even returning the calls. So it was disheartening, but once again, you have to have that focus and you lean in. And eventually, as the tides turned in the market, I started to see, people were calling me back. People were having interest in underwriting land deals. And that sparked a lot of curiosity in me of, when you're a broker, especially in land, you close on the dirt and then they go off and they create all the value. They do the development, they change the community, and you're just on to the next one. And I was consistently, keeping up, following up with the developers, learning about, how the challenges they're going through. Some were nice enough to share their pro formas so I could understand what that looked like. And that kind of put the bug in me that, development, investment, redevelopment was, the direction I really wanted to go. Unfortunately, I had zero experience in it. So, started to spend extra time after work studying up online. There's a ton of online classes. There are so many videos of, people talking about pro forma building, so many books out there that really were surrounded by, mentors that are easily accessible if you have the drive to, to continue to listen to it and build on it. And so I built through that to the point where through one of my brokerage buddies, there was a single tenant QSR that was vacant, an old Taco Bell, that I was able to acquire and then put in a new tenant. And at the time, it was also a very attractive time in the market to invest. We had 2.8% debt, 80% loan to value, and interest only the whole time we held it.
Wow, yeah.
So the terms were setting you up for success. It was that was a lucky part of it. And so did that first deal, was still doing brokerage at the time, started, transitioning that into a second deal through a 1031, was a strip center renovation. And then, started to kind of see deals in a pipeline start to grow. At some point, I decided what do I want to do? Do I want to focus on brokerage or investment, and rolled into the investment side of things. Mm-hmm. About my third or fourth deal, I quickly realized, okay, I'm running out of capital, and I need to figure out, how am I going to continue to do this part of the job that I loved while, not having enough investment to do it. And the clear answer is obviously syndication. But at the time, I was relatively young. I was still in my 20s trying to figure it out. And so at one point I was with my family. We were on a family trip for my cousin's graduation. We were driving across Norway, and I was in the backseat of the car. It was a full day drive, writing, my first investment thesis on what I would present to investors. My investors at the time were, my friends' parents. My friends were all brokers. It was everyone that was really close to me. So it was also people that I couldn't even imagine afford losing them money.
Yeah. Absolutely.
And at that time, when you start to think about syndicating, the weight of other people's capital is so much heavier than yours, because you can make one mistake and your reputation for your life can be in jeopardy in that kind of thing. Sure. So you really have to cut on like this new level of professionalism in the way that you underwrite and the way that you look at your numbers. A spreadsheet isn't just a spreadsheet anymore. A spreadsheet has a lot more depth to it. So anyways, after I finished this drive, the next day we had this huge hike called Trolltunga. And it's one of the, I'd say, most popular hikes around the world. It's where you're hiking up through the Norwegian fjords, up to this big rock that overhangs one of the fjords well below. And on this hike, there's no one else around us. There's no trail because the snow covers it in the winter. So you see these stone cairns in the distance, and you'll walk for a bit, you'll kind of feel lost. Then in the distance, you'll see the stone cairn, which, have been left there years ago as a trail marker. And we did the hike. It was a wonderful time, but it always attracted me back to the idea of these stone cairns, because they were a guide for us that we only needed, when we started looking for them. So they weren't imposing on us. They weren't, distracting us in nature. They were something that were there that really led us to where we needed to go, without being like really imposing. And over the years from that point, we were successful in raising that money. So did that first syndication, and then did, several more syndications thereafter. To the point now, we've done about 70 deals since 2012. And so we've been successful in raising the capital, working through relationships with our investors. And I'd say about a year and a half ago, I started to feel a disconnect with the company name I had at the time, because it didn't quite have the ethos of how I believed that our company, which was growing into, now we have 10 employees in shop and whatnot, the culture they wanted. And I always remembered back to that stone cairn, but couldn't quite figure out how to put it into, a name and a new company branding, until I heard someone mention the name Alakai just in passing, which is the Hawaiian word for the village guide or the village leader. And that resonated with me well for the actual cairn that we'd see on our paths. So decided to go through the rebranding effort to create the name Alakai Capital, which our logo is that stone cairn from that first hike. And it was a daunting task to go through. It's just time consuming, but it really paved the foundation for where we are now, as the way that we want to present ourselves to our investors, the communities we invest in, our partners, whether it be developers, lenders, everyone that we work with. So it's been a long journey, but it's been exciting to see it, step by step.
Cool. That's amazing. That's a great story. I think one of the points you made about taking on syndicated equity investment from friends and family that's a really important point, especially for people starting out, building their own businesses. I think that's a hard thing for people to wrap their heads around. And I've talked with many people who are trying to get started. Maybe they don't have quite enough capital and they want to invest in something. And I've mentioned that, I invested my friends and family money in my first deal, and I continue to invest in their deals, but it's their money in our deals. And it's something you have to come to a certain comfort level with, but it all comes back to exactly what you said, which is doing an extremely thorough underwriting process that is conservative, that takes into account the potential for loss and ways in which, managing to mitigate that. And I think when you can get your head around, when you really understand that process and can create that process in a way that mitigates that risk, I think that's the only way to get past that, right? Do you agree with that? I mean, that to me is the challenge for a lot of people. Have you seen that?
Yeah, it's like radical transparency in your underwriting and understanding of the deal. There's always going to be risks in any investment, but in real estate, we're really lucky that we're in an industry that the variables can somewhat be mostly quantified and understood. When you look at other types of investments, whether it be private equity, investing in companies, startups, the variables that they experience, it's substantial. I mean, it's daunting. We have an object that isn't moving. Zoning codes that generally aren't changing very quickly. Market demographic shifts that you can project outwards. So as long as you're thorough in your understanding, you can identify the upsides, and you can also identify the risks and account for those risks. And it's becomes more and more important as you're raising money. I mean, probably as you've seen as well. And lucky for us, with technological advances in our due diligence, platforms that we can use for demographics, new projects going on in the markets, it's making it easier for us to, hopefully underwrite things correctly. And that's really what sets, I think the successful groups apart, is that they do take that extra care. It's easy to raise capital today online. And there's a lot of people doing it on deals that are pretty speculative, which, if you're lucky in the market, that's wonderful. But you always have to account for a market that's shifting. And there's a lot of volatility out there right now.
Nick, before we get into talking about your tech and hospitality ventures, can you tell the audience, what comes with your rebrand of Alakai, and what are you looking to do in 2025 with the company?
Yeah, great. So the rebrand is really, as we've grown into a company more than just an individual who invests. And that's an interesting aspect of itself, where, I would think most people, and John, I'm interested to hear your perspective as well. When you start to invest in commercial real estate and you're successful, you think of yourself as an entrepreneur just by nature. And then as you continue to invest in commercial real estate, you start to, have to hire people to help you do things that you used to be doing. And you fill out these roles so you have more time to focus on, your core expertise. And eventually, at least for myself, I found myself running a company, which is very different than investing in commercial real estate. And then all of a sudden, there's all these new rules and things you need to be thinking about as you're running a company when it comes down to culture, processes, creating SOPs. And with that, you really want to try to embody your mindset, your motivations, the way that you see things moving within other people. And so with Alakai Capital, that rebrand really cemented the idea that I have of, myself and our company as, like they said, the village leaders, the guides, where in this space that we have expertise, commercial real estate, we will work down the path of having a really solid foundation of expertise, as well as a strong moral compass, so that the people that work with us know that, they will say what we say, will do what we say we're going to do. There's a high level of trust. There's a high level of teamwork within our team and with the community around us. And that really cements it, embodies it in everything that we do. And that's where we've really seen most of our success. I look back at the career and how we've grown to where we are. There has to be a foundation of technical expertise, but on top of that, it's all relationships. And it's how much can you build around yourselves high quality individuals who are also masters of their skills and have a level of trust where each person knows that, we're all going to build our companies, our teams together, and that each person's going to pull each other up. And so the rebrand, really focuses on that.
That's fantastic. I think that's a really interesting commentary. Where that transition point, kind of, when was it that you recognized you needed to make this transition, and what are some of the key pieces that have been, something you absolutely had to have to get over that hump? What were some of the elements there, some of those experiences?
Yeah, the transition point really started to happen when we got to probably 3 employees, and then the slapping me in the face by the time we got to 6+, to where something had to be done. And when you're a technician, like most of us are in commercial real estate, you just start to learn, intrinsically within yourself how to underwrite a deal, how to pass on things quickly or jump in things, how to negotiate, how to talk to others,
Mhm.
and then to package that up and then share it with someone else. If you're doing it inefficient, it can just really slow down every side of the company and also can create mistakes. And
Mhm.
as we talked about earlier, the last thing you want to do as an investment syndicator is make any mistakes that are preventable. And so, like I said, we got to about 5 people, especially when we brought accounting in house. We really had to settle down and say, okay, we need to figure out ways to create transparency in these processes and create checklists so that these processes are really easy to follow. There was a book that I read a few years ago called The Checklist Manifesto, and it really just put it right into clear as day picture. And this book is incredible. I don't know, have either of you read it?
No, I think I've heard of it, but I'll write it down. That sounds like a good
Oh,
one.
I thought John was just about to get it and show you.
That would have been great.
I like to read, but yeah, not yet.
So it talks about in the aviation industry that they started to create these checklists that were just little items each pilot had to check off before and during flights of things they should have already known, but it was just an easy way so that they didn't have to keep everything in their head.
Yeah.
And that really reduced the cause of crashes and death from human error on large commercial aviation down to practically zero today.
Yep.
Then it transitioned into the medical field, and doctors, are these really high skilled, highly educated professionals. They felt that checklists were something that they didn't need. They were kind of above them per se. And so there's a lot of friction bringing it into the operating room. But once they were able to do it, the doctors saw that it really alleviated their mindset from having to focus on the tasks to do, but rather focus on what they are really skilled at, which is performing the surgeries.
Awesome.
So it goes into the detail about how malpractice and errors and whatnot really reduced in the medical field as well. So
Mhm.
then it goes on to talk about how you can apply it in your business, and so that really was something that I held on to because
Nice.
we spend so much time on focusing on things that we had simple checklists. Then that translates over to SOPs, standard operating procedures.
Mhm.
It really just makes it so that a smaller group of people can use all of their brain power on the really important decisions they need to make each day. So knowing that and then implementing are two different things. And implementation has been a rocky road, definitely. And we started off with probably what most people have done. We had SOPs built on Word documents, things built in Excel, old, clunky, hard to access, doesn't make it easy for people to want to follow them. So then we've transitioned to various softwares through going into smart sheets, communicating more on teams. The one that we found the most success on recently is a project management software called Asana. I think a lot of people probably use it. There's ones like Monday.com as well. And what we like is we create the framework of each piece of the puzzle. So if it's an acquisition, we have a project for acquisitions. During our hold period, we have one for dispositions, for large lease signings, and it allows each one of the teammates to really follow best practices throughout that process. And what we like to do is, every now and then we'll have one of the teammates who's working on it. They'll then rewrite it back to us. And so we're constantly refining our processes
Hmm.
so that each person kind of has a little box that they can fill out as they go through and make sure that we're monitoring quality control and getting things done correctly.
That's awesome.
Awesome.
What a great
Yeah.
story. And I think it really relates to systems thinking, like you were talking about. I think systems thinking is something we were talking about recently with another guest. And when you can holistically look at managing processes as opposed to problems, you really get kind of above those some of those day-to-day issues, and that allows you, frees you up, right, to kind of engage more with the high level, high value things that you can do as an owner, right? Which is a challenge for a lot. Like you were saying before, like I've been a technician myself in terms of development and knowing the steps of that process kind of intricately because I've been through it so many times. But when you go to then turn the page, start hiring people, etc., it definitely can be a challenge. And Rachel and I were talking about how there can be cultures within a company that may just be a result of kind of group dynamics, right? Where things are happening and they may or may not be professional things if you don't have the right culture set up in place ahead of time to kind of address how are people expected to act, how are they expected to interact with each other and handle challenges and things like that. Maybe speak a little bit more to your culture. We'd love to hear more about that.
Yeah, I'd love to talk about that. And one thing I want to touch on what you're just talking about is,
Yeah,
I have a lot of conversations with brokers or other, people within the industry that are going back and forth about the idea of going out on their own.
yeah,
And for some reason, there's this attraction, and especially in the US right now of entrepreneurship.
sure.
And so most people do
Well,
want to go and,
unfortunately, there's some forced entrepreneurship, but yeah, we have been talking to a lot of entrepreneurs, and we agree with you. And so we're really like your insight and your journey is really meaningful.
yeah, so some are forced, some aren't. But a lot of people fail to realize that, when you become an entrepreneur, you're not the technician anymore. You're the business owner.
Yeah,
And there are plenty of people that have talked to me about it. And they've said, I kind of want to go and do my own thing. And they have to realize that whatever you're really good at that got you to that point, if you go and do it on your own, your skills are going to change completely. And if you love, like, if you're, let's say you're a broker and you love doing the deals, talking to the tenants, putting the stuff together, when you're running your own brokerage firm, you're going to be doing all the back of house. You're going to have to build out your processes, your team, your culture. And you really have to think through and say, is that what I really want to do? And for some people, it's yes, absolutely. Other people, it's no, I really want to focus on what I'm good at and
yeah,
just elevate that to the top of class. And so that's one of the things that I fell into. I never thought about it when I started. I just kind of ended up happening and found myself having to do it.
yeah,
But it's a key thing that I think people should think about as they're transitioning.
Yeah.
But back to the idea of culture, that's really tough. It's one of those things that you start to learn as you're in it, at least for me, because the culture has to be as authentic as it possibly can, where it is, what each person lives and breathes by without even having it on words. But then when you actually put it into words and put it in front of the company, it's got to be something that, we're not just saying, hey, we're a company of hard workers and you'll get things done. And then, on Fridays we go home at noon, because then there's just that disconnect. And we start to feel that disconnect, whether it's spoken or not, it starts to kind of just weed its way through the company. And that's, a big part of that's interviewing. So we use predictive index when we do our interviews, which, for me, it was fascinating because I pictured myself as, one type of individual. Then you answer these questions and it just provides absolute transparency on
yeah.
the type of person you actually are in the
It's a
workforce.
great,
And
it's a
so when
great system. Yeah, that's a great test.
it's a great system. I know there's plenty of others like that. But when we're interviewing, we look at someone's predictive index, we see how it matches with, our other employees. And then once we bring them on board, we also sit down and we have each person explain, like, what kind of person am I? Here's how I work, once we know they're part of the culture. So then also people can interact together and understand that, if this person's, somewhat of a more brisk communicator, focused on, getting work done in the mornings, but then, in the afternoons, that's when they may want to chat. That's good to know, because then when you say, "Hey, how was your weekend?" on a Monday morning, and this person's just, brushing right by you, that that's just the way that they're operating. But generally speaking, we try to have a culture of high performance people that are really motivated on accomplishing their goals. We're a growth focused company, and so we look at it as a team mentality, where a lot of different companies and people talk about the idea of family. And I do think that family is important, but you can't pick your cousin, but you can pick your teammate. And so, each person on our team there, if someone is using a baseball analogy, the right fielder, someone, the shortstop, every single person shows up
Yeah.
every day. They're excited about work. They're excited about what we're growing. And they know that what they're doing is just as important as every other role to get to where we need to go. And
Yeah,
it's,
and to that point, I feel like articulating the vision so people can get behind it and excited about it. That's got to be a huge piece of kind of building that team and be able to communicate that during the process, right? In terms of interviewing things like that. Is that a big part of what you've been able to build?
yeah, it's definitely communicating the vision and then consistently reminding the teammates about each step of the way how we're getting closer to that vision. So it's tying it from, the top level
Yeah,
vision, which, for a lot of companies is 10 plus years out. and then bringing it down to the day-to-day, week-to-week, month-to-month task. We have found a good way of tying those together is
Yeah, yeah.
celebrating our wins. And I think a lot of people can probably relate. John, I'd be interested to hear your thoughts about this. Is when we have like a win in the company, my first instinct is just to jump into the next one. It's great. You got that done. I'm stoked. Let's get this next deal done because that's the next one. Rather than stepping back and as a team saying, hey, this was a great deal to purchase or sell, you know, a groundbreaking ceremony, a ceremony we get our CO. And let's talk about what this meant to the team. Let's talk about who did what to help us get here. And then, you know, how does this get us, you know, to that big vision? And by doing that, it's just created a sense where everyone gets drawn together and everyone appreciates the role that each person played. And it gives you a little extra boost of energy to you know, build that culture deeper and then, you know, move on to the next one rather than just jumping and continuing to run.
Yeah. No, I mean, you got to celebrate your wins, right? If you don't celebrate the wins, I think the culture deteriorates and it turns into a me first culture as opposed to something that's more supportive, which I think in the end you have to have, right? To have a successful company. But I think there's also, I think to what what your point was that there's a tendency for, I don't know, high performers to want to go on to the next, where's the next mountain? Where's the next mountain? I think you have to have some of that. Otherwise you just kind of sit around and celebrate too long. Right. But that being said, you also need to stop, and maybe it's, even if it's just for 30 minutes or 20 minutes and really recognize that there's been accomplishment kind of achieved, and recognize the team members who were a big part of it. You know, I think that's super important, but yeah, no, I think that's great. Did you, Rachel, I know you wanted to talk a little bit about tech because that's your one of your favorite subjects. Did you have any questions on that?
Yeah. And before we transition into the tech, I just want to say, you know, whether it's prop tech or development, going from the individual contributor to working, you know, with the team and then to running the company is a huge issue. And that's, you know, part of why we do this podcast is entrepreneurs to learn from other entrepreneurs who, you know, maybe had a big backing of a company or a large brokerage. And so how do you go and start your own company? And also, you know, tools like Asana are amazing, but it takes a long time to set up Asana correctly and to work through it. So that's also like, anyone can say we have Asana, but to use it and to set it up before your company is in massive growth and while your company is in massive growth, to keep tweaking that is pretty difficult. So like for you to have already started that work and have that as part of your workflow is, you know, is pretty awesome, and something I know a lot of entrepreneurs aim to do, and to hear someone doing it very early is really great. But like John said, I do want to hear about the tech side. So really interested to hear what you're doing in terms of looking at tech and tech investments and how that plays into your company and into hospitality.
Tech's an interesting one in real estate because it seems that our industry is so behind the eight ball, and you know, we continue to be, but with the ease of access to tech and ease of picking it up, you know, I think that we're starting to see momentum shift. And with the new things that are coming out, there is a high likelihood of a bifurcation between the companies that are able to really streamline their processes relative to companies that, you know, continue to maintain the same type of speed that they're at now. So the one that we've really been leaning into is implementation of AI, and really, you know, one of these LLMs. So ChatGPT is the one we currently use into our day-to-day operations. And these are probably very elementary style implementations based on many other industries. But, you know, we're using it for a lot of our communication, whether it be refining our emails to our investors, our emails out to brokers, our social media posts, also doing lease abstracts. So reviewing the leases, and these models still have errors on them. They still have, I believe they're called daydreams on them. So you also have to verify the work. And so creating your prompts on AI in a way that it can make the verification quicker is how we're able to keep, you know, our quality control elevated. And so with, you know, lease abstracts, we're able to just say, here are the things that we need to have in the lease that we need to show, and also show us where it's located in the lease. so they can go back and verify it and move it on. I mean, that alone, we acquired a property the other day that had 80 tenants. And so to go through all those leases years ago would have been monumental. With able to implement it, it was a lot quicker, saved our team a lot of time to then where we could find the problems or some of the benefits of the lease and move on. Also with our communication, the one thing that I have to say is AI gets you somewhere, but it's probably 75% of the way. You see constantly, I can notice emails nowadays when someone has just thrown in ChatGPT and sent it out, and it kind of lacks that human character. You see it on social media. I mean, you see it on LinkedIn, right and left,
Definitely.
and it's very clear who's using it.
Yep.
I think it's more of kind of a foundation, a springboard. So
Mm.
then you add the human element, which is really the meat of all the communication.
Yeah.
We're exploring right now using it with updating our reporting. So our monthly reporting is very in depth, whether it be on our debt, on our P&Ls, and then putting it at a portfolio level, wrapping it all up. It has a little tougher time with the numbers, but we're definitely getting it to where, as we put the numbers together, it is presenting it in a fashion that allows us to extract more value out of it. So I'd say AI is really the biggest thing now, and they just implemented it in Asana. They implemented it in I think Loom has it now. So it's learning to think differently is kind of the key component, I think, for the future of our industry and other industries.
Yeah, it's super interesting that you're describing how you've integrated it and are integrating it. It's pretty it's eye opening because I feel like I've been doing a bit of that myself with some of our operation here, and it's helpful, but so much of it feels like, at least as you know, we don't own big businesses. We're not multi-billion-dollar companies, right? So when you're working at a scale, you don't have an IT team. You may have an IT person, but you don't have an IT team, etc. Figuring out ways to use AI effectively is definitely the challenge. But it's also, it's definitely creating pretty significant efficiencies, which I think is, if you can leverage it the right way, it can really be massively value add, which is great. But so tell us more about, so your experience. You've evolved in terms of some of the things you've invested in. So I'm curious, kind of hear more. How did you end up investing in these early stage tech ventures, these hospitality ventures? Where are you with that? Are you mostly taking LP positions, a little bit of partner positions? Are you also in a general partner seat in some of those? Kind of what does that look like?
Yeah, on the tech side with Alakai Ventures, we're definitely more on the LP side. And we either invest directly in the company or we invest through a fund model with fund operators that we trust their underwriting. It was something that I guess we fell into some extent, as you are constantly growing your network
Yeah.
and especially as you transition from, like I said, the technician into just business operations of things.
Yeah.
A lot of the challenges we go through, I can relate to anyone else that owns a business. And so, the people I look out to that I, reach out to as mentors and whatnot are generally, natural business owners. And so as that web grows, you start to see opportunities and, see areas where there's significant potential for growth. So our first investments were focused mostly on tech, and thus far it's mostly, continuing that direction because, these tech companies are so scalable
Mm.
and there's so much disruption within that field where
Mm.
a small group of really intelligent people can make a massive difference on a global level. When we look at our real estate holdings, our deals, on average right now, our deals have returned our investors about a 2x. And so, most real estate deals when you underwrite them, it's about, I'd say, let's say 1.5 to 2.5x with a IRR, somewhere in 30, 20 to 40%.
Mm.
So it's a very linear growth model. And, in real estate to be successful, it takes a lot of time and a lot of focus over years of continuing to reinvest, build up your equity positions on cash flow, on, really horse trading between properties where a lot of this tech type investments, you can be getting 100x, 50x. They're somewhat moonshot type investments.
So
And so the
what
way that
types
we've
of
seen it,
technologies have you invested in? I'm just curious.
we have invested in, I guess the first one we did was a fintech company that changed the way that payment processing took place. where historically it had always been, credit cards would charge a 3 to 4, some percentage fee based on it.
Mhm.
What this company said was that doesn't fit every type of business. We believe that there should be a fixed fee, a dollar amount per transaction, regardless of the size of transaction, and then just a monthly, base foundation they pay.
Mm.
And that was an attractive alternative to large volume transaction businesses that the actual investment may not, or the actual transaction dollar amount may not be that high.
Mhm.
And so that was a local one in Orlando that we saw success. So from that, then we positioned into online marketplaces. I think that that's a really attractive space
Mhm.
because we're seeing more and more commerce go online. And once you build a hub that people start to trust and it starts to get momentum, there's no real reason for any of the businesses to switch into a different marketplace. You don't have to have a product. You don't really have to be involved in anything other than just creating the easiest platform for commerce.
Mm.
So we jumped heavily into that. And then recently we've been more into, uh, companies around AI, just because, there's so much opportunity there. It's also a challenging market because there's so much disruption. It's
Yeah.
daily you're seeing changes where we thought, we saw it the other day with DeepSeek where it just kind of threw everyone upside down saying, okay, well, if AI can now, if an LLM can be built for $7 million, what does that say about all these large legacy companies where the thought process before that was only the large, behemoths in the industry would have LLMs.
Mm.
So it's
Absolutely.
challenging. It's way more challenging than real estate. It's way more risky than real estate. Similar to how we've built our real estate business on relationships, our investment outside of real estate has been, focusing on founders or fund managers that we really trust their experience and their vision of where things are going, and
Mhm.
then making sure that the companies are in a space that is rapidly growing and has a large, market size. So
Yep.
a lot of these companies, can change the whole world. Everyone in the world may need them. They're not generally smaller type markets.
Interesting. I think as we're kind of wrapping up, would love to hear, just bringing the conversation back to commercial real estate. Where do you see opportunities for you and your business over the next few years with some changes that are going on, both regulatory environment, new administration in Washington, D.C., things happening here in Florida? Where do you expect there to be opportunity, and where are you very specifically excited about that some things that you're working on?
The Washington D.C. changes are going to be interesting. A lot of people that are now involved in government tend to have a real estate background. So one could believe that there will be some tax advantage strategies coming back that would benefit the commercial real estate sector, in particular, accelerated depreciation with cost segregation.
Mhm.
That is a piece of real estate investment that I just think is underappreciated, the drastic impact that can have on real estate owners. And it's probably one of the better tax advantage strategies that I've seen in the whole IRS code. So that will be a huge benefit if that does come back.
Mhm.
And for those of you who aren't aware of it, when you do cost segregation, you go to a property and you just segregate all of the different values of the equipment within the property. With the accelerated depreciation, I believe it was 15 years and less of equipment age, you could depreciate year one. And so it's not forgiven, but the value of that you're able to take into your taxes that year to pay back whenever you sell the property in the future. So it just gives you more money to spend today. So I'd see that be as a benefit.
Yeah.
A challenge possibly could be inflationary pressures based on some of the administratives' positions that they're taking, and that will obviously create what we've seen right now with interest rate increases. The flip side of that, one of the most exciting aspects I've seen in commercial real estate in my career is the impact that inflation has had on investing. And what I mean by that is we've had inflation in the past. We've all read textbooks about it. We've seen case studies on it. But until you actually experience it, you don't really know
Yeah.
how it works and how it feels.
100%.
And it's really challenging for the average individual in the US. It's challenging for me to live in the US when I go to restaurants and I see, my bill, it seems like it's always inflating now. But from a commercial real estate perspective, it is way more blotchy than I ever would have imagined. And so we've seen opportunities where, an example, in Central Florida since 2019, we've seen industrial rents go up 60%. And so there are landlords out there that have been really strong landlords. They've owned properties forever. And each year they're jumping rents, 3 to 4%, thinking they're doing a good job. Meanwhile, the building across the street is at 50% higher rents.
Yeah.
And so just because of the inflationary pressures we've seen in the market, you could buy really high quality assets where, maybe someone wasn't paying attention to what the market's actually doing. And you can go in there and, create a lot of value through increasing the rents for your investors.
Mm-hmm.
So that's been an aspect that, we've been exploring quite a bit. We're seeing a lot with industrial, a lot with retail. We've generally stayed away from office, but it's a tool we've been able to use, but it's it's a double-edged sword, right? Like I prefer not to have inflation, but if it's there, we might as well try to take advantage of it.
Fantastic. Well, this has been a great conversation, Nick. Really appreciate you coming on. What's the best way to kind of get in touch with you and keep track of what you're up to going forward?
Yeah, so our website, alakai-capital.com, is a great way to reach out to us, see what we're working on. If anyone's interested in investing, we have an investor portal where we provide updates on things like inflation, what I just mentioned, where we're seeing exciting new opportunities, various newsletters and whatnot.
Mm-hmm.
I'm also heavily on LinkedIn. So you can go to my LinkedIn, which is Nick Jones Real Estate. And you can reach out to me at any time through any one of those avenues, just through direct messages. I'd love to chat with anyone in the real estate sector.
Fantastic. Well, we'll definitely make sure that all that information gets in the show notes for our audience. And thanks for coming in today. We really enjoyed the conversation.
So much, Nick.
Yeah, I appreciate it. Thank you too.
We want to hear your thoughts and feedback on today's episode and what topics you would like us to discuss in future episodes.
Follow us on Spotify to be notified when our next episode is live. To connect with John and I, follow us on LinkedIn.
Thanks for joining us today on Breaking New Ground.